Chapter 7, we are going to cover accounting for foreign currency transactions and then entering into some futures markets and derivatives. So the thing that happens when we are companies that are doing international business is the US dollar changes in relationship to foreign currency. So in many cases, it has fallen. So it takes more US dollars to buy a euro or to buy a Canadian dollar. So if the companies are doing business with these international companies and either they're making payments that need to be made in euros or possibly the payments are coming up into us as euros, if the US dollar changes and our exchange rate changes, we may end up losing or gaining money, but it has nothing to do with our business. It has fully to do with the change in the US dollar. So we'll have accounts payable and accounts receivable so you can see it. So if we purchase products from a manufacturer in Italy and we have to pay in euros, we're going to record the transaction at the exchange rate on the date of the sale. So we set it up, debiting the $1.30 times the 10,000 units times the 15 euros. And that gives us the 195,000. Then at the end of the year, we're going to look at it and say, is that really still what we owe? Because the auditors want everything to be accurate. So if our exchange rate goes to $1.40, so now it takes $1.40 to buy a euro, so the US dollar has weakened, we're going to have a loss. So we need to increase our accounts payable to bring it up to what it really is. And then we're going to debit a foreign currency transaction loss. So again, it's the $1.40 times the 150,000 euros that we need to have, and we compare it to what we already recorded, and we just record the difference. Then the dollar goes down even further. Now it takes $1.45 to buy the euro. So again, we need to pay off the supplier at that current exchange rate. So then the 150,000 euros times the $1.45, it's going to take 217,500 US dollars to pay for that. We have 210,000 set aside in our accounts receivable. So again, we have another foreign currency loss. Then what if it goes the other way? So now somebody owes us. So we'll see that flip-flops it. If the US dollar weakens and somebody owes us, we will end up making money. So then we'll set up our accounts receivable so it's 12,500,000 yen at an exchange rate of 0.008 to get 1 yen. So basically we're going to get 100,000 US dollars if they pay us in what they owe us on that exchange date. So they haven't paid us yet, but what they owe us in relationship to that sale. Then again, the end of the year, the auditors say, hey, is that really what you're going to get? Then we look at it and say, okay, well, they owe us 12,500 yen, but now the exchange rate is 0.0085 to buy a yen. So then we're going to actually get 6,250 extra dollars. So again, we increase our accounts receivable and we record a foreign currency transaction gain. Then it goes down even more, and then this is when they pay us. So then the cash is going to come in at the 0.9 cents or 0.009 to get 1 yen. So 12,500,000 yen times that 0.009 gives us $112,500 of cash. Our accounts receivable, we can see above, we just adjusted it at the end of the year to $106,250. So we got another $6,250. So again, it resulted in a gain. So this is a nice little table that kind of shows you, again, if the US dollar is weakening and we owe, we're going to have a loss. If someone owes us, we're going to have a gain. If the US dollar is strengthening and somebody owes us, we're going to have a loss. And if we owe somebody, again, another country, we're going to have a gain. So it's good to kind of know those, maybe jot those down, because I think you do have some multiple choice questions that'll ask you that. And if it helps you to think about it in the accounting equation, that's what's at the bottom of that. Okay, then because companies do not like to have those gains or losses that they cannot control, they go out and they will hedge these gains or losses, and they will enter into these forward contracts with a financial intermediary. I can't even say it, intermediary. So that could be like a bank. It could be a finance company like Enron, if you've heard of Enron, and of course they're fall. But they were a financial intermediary, and they did these hedges. So they did some high finance stuff. So those are the people who enter into these contracts, and then basically you're like saying, hey, well, it's almost like an insurance policy. If the U.S. dollar goes down and you're paying, then you hedge it at an amount, well, this is the lowest it's going to go. This is the most of the loss because I'm hedging at this rate. You know what I mean? So you're kind of hedging your loss. And then what happens is if it would go down below that, then the financial intermediary is going to owe you the money, and then you then pay your supplier. If it's the other way and the customer pays you, so say it's and you owe, say that the U.S. dollar is weakening and you get more money. So you get more money from your customer than you thought, and you hedged it. Then you would owe that financial intermediary. You got to give them some of that money back. So again, it all depends on what happens with the U.S. dollar, and then what the companies think is going to happen. So then here they give us, these are the different risks that you are trying to manage when you're entering into these derivatives. And then we'll have the futures contracts. We could have purchase options. We can have a forward contract. So the futures contract, we're hedging the value of inventory. The forward contract, we're hedging the value of the U.S. dollar. We can also enter into interest rate swaps. If we felt like the interest rates were going to change, we could hedge those as well. So then watch my videos on how to do the problems, because that will help you kind of understand those journal entries.